Question: how does Metcalfe's law reflect in the price of a token? So Metcalfe's law is the number of users of a network and basically the number of interconnections between the network. So you can have a network like Doge, which just has users and no connections, i.e. it's not being used for anything. Or you can have a network like Ethereum, which has a huge amount of two. If Bitcoin is mainly hodlers. So different networks can be different ways. The Holy Grail is both together, both growing. What it means is a network is incredibly valuable if people want to own it and want to use it. When you've got the owning and using numbers growing, then the network is valuable. And that's how Metcalfe's law works. And almost all of the crypto protocols work in exactly the same way. And they're pretty much priced fairly according to Metcalfe's law. You know, you can use estimations of Metcalfe's law, but you generally find that they don't deviate a lot. So even things like XRP, I was like, oh, fucking hell, I hate XRP. Well, it actually works because the transaction volumes are low in individual size transactions, but there's a lot of them and there's a fair number of users. So that means that it has a certain worth. Bitcoin has less transactions than Ethereum by a massive amount, but the size of the transactions is very big. So that gives you some elements of why Bitcoin is so valuable, because it's a valuable network. It's like, you know, you can sell handbags, or you can sell Louis Vuitton handbags or Chanel handbags. That network is worth more than selling cheap high street handbags at Zara, for example.
Despite seeing a 3.11% drop in value in September, Bitcoin still outperformed both the S&P 500 and Nasdaq. Ethereum, on the other hand, was named the worst performer after the long-awaited merge proved to be a buy the rumor, sell the news event. Increased Tether and US dollar trade volumes for Bitcoin are said to suggest panicking investors were dumping depreciating currencies in favor of the cryptocurrency. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul Pal shares his updated outlook on cryptocurrencies including Bitcoin, Ethereum, Solana, and Dogecoin. Raoul also shares his perspective on the US dollar, inflation versus deflation scenario, and his thoughts about economic depression.
De-dollarization I talked about is a slow, gradual process that will happen over time. They have to figure out what to price it in right now, and we don't have an answer. The Chinese have a closed capital account, so we can't use the RMB. So maybe there's a basket currency that needs to happen. So we don't have a mechanism by which we can create a different pricing mechanism for stuff like oil. They all do want to move away, as I've said. You know, why should South Africa export minerals or metals to China and have to have the dollar in the middle of it? It makes no sense, but that's the system we've got. So it will change, and it's not going to mean hyperinflation. It means the dollar goes much, much higher because there ends up being a shortage of dollars because all the debt is in dollars. So you take these other dollars out of the market, and you've got an even bigger shortage of dollars. So that creates a big fucking structural problem for the world. So we need to be careful when that happens. And then the US becomes a lower impact from the world, and maybe that's a good thing. I don't think it leads to hyperinflation. I don't see where the ... hyperinflation comes from. It's a very, very rare thing. Could it happen that people lose faith in the US? Yeah, but luckily we've all got cryptocurrencies, gold, and a few other things to protect us. So who really cares?
According to the latest Crypto Compare report, Bitcoin, which saw a negative return of 3.11% in September, still outperformed both the S&P 500 and Nasdaq, which saw negative returns of 9.34% and 10.5% respectively. Only Solana, the cryptocurrency among the tracked four that saw a positive monthly return of 5.59%, and gold, 2.87%, had better risk-adjusted returns than Bitcoin.
Inflation, deflation. Clearly, we're in inflation right now. You have to be a blind monkey not to realize that. I actually didn't think it would go this high, but I also didn't actually have in my bingo card Russia invading Ukraine. But we get these things wrong. That's the part of markets. My view is that this inflation turns to deflation. I know there's a massive analysis of structural inflation driven by supply issues in the oil markets. We could see that today, this fight that goes on between supply and demand. I know a lot of people think that much of this is stickier. I know a lot of people also just emotionally want to punish the Fed for quantitative easing because they want to prove that it has inflation. Those tend to be the gold types. We told you so. Angry men shaking fist at the sky on the internet. My view is that when you have a year-on-year rate of change of interest rates like this, when you have just the mathematical effects of these numbers for next year, it's bloody hard to have positive inflation. And my guess is it goes negative. And my guess is a recession causes more demand destruction.
Ethereum, on the other hand, is identified in the report as the worst performer among 4 tracked cryptocurrencies after the long-awaited merge proved to be a buy the rumors, sell the news event. To support this assertion, the report points to the crypto asset's contrasting fortunes in August and September. After seeing its best risk-adjusted returns in August, ETH still went on to have the biggest decline in September, the same month the Ethereum blockchain was switched to a proof-of-stake or POS consensus mechanism.
I like Solana. Yes, I understand it keeps breaking. Yes, I also understand that everybody knows that, so there is no informational edge in that whatsoever. And therefore, if it survives breaking and it's one of the largest crypto protocols and it has more activity than any other chain outside of Ethereum, then the likelihood that Solana participates well in the next up cycle is very high to me. So I like Solana. It's one for me.
In terms of the different assets' volatilities, the report said Bitcoin was the least volatile asset and the most dominant among 4 cryptocurrencies that were tracked in the month of September. Volatility across cryptocurrency markets saw a slight increase in September amid the interest rate spikes and the unstable macro environment.
The dollar is in this doom loop where it's a game of musical chairs. The musical chairs here are the US is 25% of world GDP. 87% of world trade is in US dollars. Most international borrowings are in dollars. The eurodollar market is the epicenter of that. The issue is when the Federal Reserve start taking money out of or liquidity out of the system, it knocks through to this murky world of eurodollars and foreign dollar borrowings. And those weaker borrowers start scrambling for the dollars. And it's a game of musical chairs where somebody gets rug pulled and somebody falls to the floor because there's not enough chairs to go around, not enough dollars. That was Sri Lanka. That started this off, and I tipped you guys all off about it back in March, I think it was. Then after that, we've seen numerous countries go into default or renegotiate with the IMF and the World Bank and others. That's the shortage of dollars. The shortage of dollars is what puts the European banking system under pressure. The shortage of dollars kind of knocks through for the global market. Now, there's another issue going on right now is the US, its trade deficit. If you think of a trade deficit, it's the US buying goods abroad. That's spending dollars elsewhere, so the rest of the world gets those dollars and they get to recycle them into treasury bonds or do other stuff with them, have borrowings against them. When the US runs a smaller deficit, there's less dollars in the global system. So that makes another problem. So you've got liquidity being sucked out and you've got the trade deficit, meaning less dollars are going in the system. Yet in a slowing economy, everyone needs to pay the interest on their debts, so demand rises. That's the mess we're in. Foreign central banks end up having to sell their treasuries to either support their own currency or because they kind of need other things to be able to do with the dollars that they hold. That becomes an issue, or they want to receive the dollars to pay off the interest on their debts. That becomes an issue because it's driving higher interest rates. Right now, the interest rate market has no buyers.
Meanwhile, the findings of Crypto Compare's examination of both USDT and US dollar traded volumes suggest that panicking investors were dumping depreciating currencies in favor of BTC. In September alone, traded volumes in Tether and the Greenback went up by 15.4% and 15.1% respectively. So what are your thoughts about Solana? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.